just hit go live. Yeah.
Oh, there you go.
And there we are.
All right. Welcome back, everybody, to another episode of the Tim and Tim Show, making moves in multifamily live. We're glad to have you back. This week, we're talking about insurance claims, our experience with them. We've had some substantial claims over the last, 12 months now, a little less than
Mhm.
12 months.
Yeah.
And we're just kind of going to talk about our overall process, what it looked like, how our mindsets have changed. And, we've made some decisions. We just kind of roll with the punches as they come. But we felt like we probably should talk about how that rolled out, why we made the decisions that we made, and some things for you guys to think about if you ever find yourself in a situation where you have a major insurance loss. So, with that, Tim, where do you want to start with this whole book?
First, I want to dude, I'm digging the black shirt there, by the way. I'm
Oh,
liking this.
man, it's J. Crew
This
black shirt. It's the only way.
you got like this Simon Cowell thing going on. I'm kind of digging it. All right. I
Oh,
like
why, thank you.
that. Hey, little man crush here. Uh,
It doesn't have
oh,
a
hey.
Vive logo on it, though, so my wife's like, "Well, it's weird. You're not wearing anything that's your branding." I was like, "Yeah,
Yeah, I know, man.
everything's dirty."
What's up, Dennis?
Hey, Dennis.
Y You know what? What's sorry, not to get off track, but you know what's funny is I try to wear stuff around on the weekends. I'm like, all I have is Vibe and Make It Move shirts. It's
I
like,
know. Yeah, I know, yeah. The same feeling. Yeah, now I just need some tank tops and board shorts, and then I'll be branded
oh
24/7.
yeah, 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 for sure. Hey, what's up, Joe? What's going on, man?
Well, Joe,
Hey,
this is relevant to you.
yeah,
Just Joe is one of the partners in one of the deals that we had one of these insurance claims on, so he's along for
yeah.
the ride. Johnny
And
Cash.
what's interesting is he Johnny Cash, I like it. Hey, should I show them the guitar in the back?
Yeah, yeah,
Um,
you can.
yeah, I've actually shown it to Joe before.
Oh,
Yeah,
you have?
Joe, yeah, the Johnny Cash signature guitar. Um,
You know what's funny is my neighbor bought his daughter a Martin guitar, and while they were on vacation, it showed up on their doorstep, and I had to go over there and grab it. And I was like, "Oh, I know what this is!" And
yeah,
I
that's the
sent him some pictures of the one of that Johnny Cash one, and he was like, "I don't really know what I'm looking at, but I'm sure that this one was more expensive than this one."
Yeah, well, I don't think there is a cheap Martin out there, but
No, I
yeah.
don't think so either.
But all right. So insurance. Joe, funny, Joe actually reached out to me this morning, asking me to give him a call when I'm driving around to chat about the stuff going on out on one of our properties with the insurance. But yeah, man, the insurance stuff. So hey, here's a softball question for you, Tim. Whenever you have damage to a property, do you just go file a claim?
No, absolutely not.
Because
No.
the reason I ask that, guys, is because I think that's a decent place to start, right? Because I think the idea is typically, oh, let's go file a claim. Let's go file
Mm,
a claim. Tree fell on my property. Let's go file a claim. In fact, um, those hurricanes that came through last fall here in the Carolinas,
we didn't submit a single claim for any of that.
no, and we had damage on three properties.
Yeah.
We had damage on one near Lawrence, South Carolina, one in Greenwood, South Carolina, and then down in Walterboro.
Yep.
And we didn't file a single claim, not one claim. And I think one was actually kind of close to do you file or not based on your deductible, right? Um, and so that's kind of one piece of it. Like one of the things that we look at when we're thinking about considering filing a claim is like, hey, what's the total cost of the repairs? What's our deductible, right?
Mhm.
And I think one of them, I mean, guys, don't quote me on the numbers because I don't remember exactly at this point, but let's just say one of them was like 70,000 in damage, but $50,000 deductible.
You still don't submit a claim because what are you gonna
Right.
collect? $25,000 and then your rates
Right.
go up?
Exactly. And that's the kind of the conversations like Tim and I'll sit down and have, which is, hey, I know we still got to pay 50 and there's maybe we get 20 that we don't have to pay, but what's our rates going to look like?
Right,
Right.
and then the conversation further goes of, okay, well, if our insurance premium go up 10, 15% because of this claim, how much
Right.
value are we losing in equity on the property?
No, that's a great point, Tim, because some people look at it like, okay, my premiums went up 4,000 a year, right? But I got 20,000 back, so my break even, like
4 or 5 years.
I'm losing 5 years later, right? But to your point, Tim, like, hey, real quick math, you know, uh,
$4,000 at a 6 cap.
4,000 at a six cap. that's $66,000 in value.
Right.
So, what did you really gain by making that claim? So it's kind of for us, it's really got to make sense. It's got to be
And then
substantial,
the
right?
other side of it is when you go to sell the property, not only is your NOI lower, but when the new buyers come and buy the property and they ask for
Yeah,
your 5-year loss runs and you
right,
have a reported claim on it, a lot of insurance carriers will just not accept. Like if you report any claims, they're like, sorry, we just don't accept any property that has any claims ever.
right.
You know,
So
so
yeah,
then you limit your buyer's ability to get insurance, and then their rates are gonna go up and cost more money, and then therefore your price is gonna come down. You know, so it's
right,
insurance is this disgusting web of nastiness that, it very rarely works out in your favor, in my opinion. Obviously, these are all for-profit businesses, insurance companies are. Um, so I mean, we've had people drive their cars into buildings and we didn't submit a claim. We had all the hurricane
yeah,
damage that we
yeah,
didn't submit a claim for. Um, what else did we have? I mean, we had that was two different incidents of people
yeah,
driving into buildings in two different states.
yeah, yeah. I forgot about that. Yeah. And yeah, I hate to, it's funny you're talking about this big disgusting or whatever. Like I heard a guy that I have a lot of respect for. He made a comment one time when we were talking about insurance. He's like, the only business I know where the house is stacked more in favor of the business is a casino than insurance, right? And he's like,
Mm,
he goes, I
yeah,
think casino. He goes, I think insurance companies are right behind casinos
yeah,
in house odds. You
yeah,
know, like,
right. Yeah, that's fair.
yeah, and there's a reason that insurance companies have all these. What are they, actuaries that sit
Yep.
around and they figure all this stuff out, right?
Yeah,
Uh,
yeah, yeah.
yeah. So guys, like, what kind of wanted to talk about, like, do you always file a claim? Quick answer is no. Um, but you got to sit down and you kind of do that assessment. But one of the things I'm not, I won't go that far, Joe, but almost.
Well, if you talk to any insurance agent or agent broker or anything like that, you know, the insurance claim, they're saying that it's not for the little claims that come up. You're insuring for a total
Yeah,
loss.
right.
And that's fair, right? Because the value that you'd get out of a total loss is far greater than what you're paying.
Yeah. You
Um, Now,
you bring
what's
up
the
a really good point.
probabilities of a total loss, though? I mean, I have very rarely seen anybody have a complete total loss, but I'm not to say that it's not possible. That's for sure.
Hey,
Uh,
Mike, one second. I want to come to that because I think Tim brings up a really good point. Because Tim, I mean, I look at it at a personal level, right? Like I've always looked at like my insurance that way, and as I've gotten older and had more cash in the bank, quite frankly, I've actually increased my deductibles on my personal insurance, right?
yeah,
Because as I've gotten older, I've said, hey, when I was younger, I was like, man, a $5,000 insurance claim would hurt, right?
right, right,
Yeah. Now as I've gotten older, I'm like, you know what? I can probably stomach a ten or $15,000 claim, right?
right.
It not ideal, but I'm like, hey, how do I reduce my monthly, and how do I reduce my expenses and stuff like that? Increase my deductibles, right?
Yeah,
Or I can increase my coverage, have better coverage with higher deductibles, and I'm like, hey, I can eat this. So, and we do the same thing on our properties, right? We're like, hey, $100,000 claim, we'll figure out a way to kind of cover that kind of thing. So, we don't want our deductibles lower than maybe that number or something. Um,
yeah,
and at the same time, we've also done the opposite. In fact, we had this conversation with an insurance broker not too long ago. In fact, it was during hurricane season where it was like our deductibles were such, they had manipulated our deductibles that they were such that we're like sitting there going, I don't know how I ever use this policy, right? Like the deductibles look good, but when you take it out across the total portfolio, it was like, what, give me a scenario where I can actually utilize this policy and experience these fabulous deductibles you've given us. I don't see one, right?
right.
Um, so it's just kind of it's just kind of an interesting thing that, like, hey, over time, the risk you're willing to take on may change, right? Depending on your position in your business plan.
Right. And you have to take that into consideration whenever you're buying a property, because I know I've seen a lot of other people underwrite to a marginal increase over the prior owner's insurance. They're like, "Well, if they're paying $400 a unit, then why would I pay more than 425?" you have no idea how
Right.
much coverage they have, what their deductibles are, what the quality of the coverage is, how much their debt is. I mean, there's so many variables. That's why it's like whenever somebody submits to me what their insurance costs are, I don't even look at it because it's irrelevant.
Yeah, because to your point, like Tim just named a whole bunch of things, and then the other thing is you don't know what your lender that is going to require of you.
Yeah.
And you go into your underwriting. How many of us know which lender exactly we're going to go with, right? At the underwriting phase.
Oh,
Probably not many of us, right?
no.
So you may end up with a choice of five lenders, and all five of those lenders may have different insurance requirements they're going to require of you in order to send you a loan, right?
Mhm.
And that changes your numbers drastically.
Yeah. Yeah, I mean, that kinda answers Mike's question here of, does it make sense to have insurance? Like, you're required to have insurance unless it's paid off. The bank is gonna require that you have insurance coverage up to a certain extent, and they're one of the named clausees, so
Mhm.
that if because they're the first position debt, so in the event of a claim, they get made whole first, and then there's anything left over is given to you.
Yeah,
You can't just self-insure or pick a policy that covers only total large losses because the lender requirements are going to dictate otherwise. They want to make sure that their asset is protected that you're borrowing against until you own it outright yourself.
yeah. And Tim, here's like because you and I had this conversation one time on one of our because and I still don't quite understand, guys. Like this is where I get very juvenile when it comes to like insurance policies. Is um we had a lender one time doing like a $14 million loan or something. I can't remember what the exact number was, but it was in that teens range. And but they were requiring like $42 million of coverage and replacement costs.
Yeah,
And I'm sitting here like that. I don't understand that at all, right?
yeah,
Because as the lender, really all you should care about is that I'm able to pay off your loan. I'm able
correct.
to pay you back. So why are you requiring three times your loan amount for insurance coverage from me?
Right,
Because they're literally like, well, we want to make sure you can rebuild. I'm like, why do you give a damn if I can rebuild? As long
right,
as I pay you off, right?
right.
And I still haven't figured that one out.
I haven't. I mean, it's just, the explanation that I had gotten from the broker is that's how the insurance carriers look at it is, they look at it as what's the total replacement cost of the building. And that's what your insurance policy has to be, right? Because that's what they say is you're insuring for a total loss. Okay. And the cost to rebuild. And that cost to rebuild is going to change. And I mean, we paid significantly less than the replacement cost, but the market value versus the replacement value can be two entirely different things.
Right.
So it might cost you
Right.
150, 200 grand a unit to build, and you might be able to go buy it for $60,000 a unit. Doesn't mean that it still won't cost $200,000 a unit to rebuild it.
Yeah. But my good question, man, because Tim and I have actually had conversations about self-insuring, basically about setting up our own insurance company, um,
Yeah.
as a result. But obviously, we haven't gone down that route. Um,
There's options for it, but there's so much gray area, and it was
yeah.
like a complexity that we really didn't need to add at that point in time.
Well, it's a complexity, and then there's like the first year or two, there's like a pretty big risk factor involved, right? So,
Yeah, huge
uh,
risk factor until you start to build up the reserves as the insurance company.
yeah. So, but guys, like, as we're going to the last, little bit of the show here today, I think kind of one of the things Tim and I can talk about are like the two claims that we've had in what the last 6 months. Um, something like that.
No, that other claim was in
Oh,
June of last year.
okay, so almost a year now.
Yeah.
Um, one claim we had was we were actually under contract, I believe, at the time
Mhm.
to sell the property, and freak storm came through.
A hailstorm in June came through.
Yeah, yeah,
Yeah.
freak storm. Um, very localized, guys. It was almost like a microburst or whatever you hear those storms are, and it was literally like horizontal hail. I mean,
Yeah. Golf
it
ball
was
size hail going horizontally.
yeah. So absolutely chewed up our siding on this building, our roofs as well. Fortunately, it didn't bust any windows. Thank God for hurricane glass, I guess, or hurricane rated windows.
You complain
Um,
about it when you're building and when you're replacing them, but when you need them, you're like, "Man, it's great that we spent all that money on those hurricane
yeah, yeah.
rated
It
windows."
it was kind of crazy. We're like, we see the pictures and we're like, not a single window got busted. How did that happen?
Yeah.
Oh, there you go. But guys, it was kind of interesting. We're under contract to sell. And the insurance claim overall, Tim, I felt like that insurance claim process really wasn't that bad. Um,
No, because there was no, like, loss of business, there wasn't, the
right,
property was functioning, it was all exterior damage, and it's very easy to quote exterior damage and say, "This is how much it's gonna cost."
right. And we had, our process was we had kind of started to get some quotes ourselves from independent third parties. Obviously, the insurance carriers doing their own assessment, right? And quite frankly, our quotes came in maybe a little bit lower than what the insurance company had quoted. So we were just like, okay, let's go. Now, in this particular one, like I said, we were under contract, and at that point, it became a conversation of, hey, Mr. Buyer, do you want to do the work? Or do you want us to do the work? And if you want to do the work, we're basically going to assign the proceeds over to you, right? Um, Buyer chose, just like I would have too. I would have chosen to do the work myself as well. Give me the check, I'll do the work, right?
Mhm.
Um, they chose to do that. Um, some of the little nuances that came through that one was insurance company typically will hold back a certain amount. They're like, here's the amount we'll release to you to get it done. Here's this little bucket over here in reserves, insurance holdback reserves. If you spend more than what we've dispersed, you have the opportunity to come claim this money sitting in this reserve account, right?
Mhm.
Um, so in that particular case, we basically at closing assigned a credit for the amount that had been given to us from the insurance company to the buyer, and then we gave them what's it called? Benefit of we gave them the benefit, right? The
Yeah, what
benefit
was
of claim.
be yeah. Yeah, we assigned them the benefit of the claim, so if any benefits
Yeah,
come from that claim at any point further, it all goes to them.
yeah. So essentially, for that particular incident on the insurance policy, the new buyer had the opportunity to go to our former insurance company and make any additional claims, right? So um, that's basically how that one worked. That one was pretty straightforward, to be honest with you, because I mean, our deductible, the total damage was, I don't know, something like 6 or 7 times the amount of the deductible. It was
Mhm.
pretty substantial, and it definitely made sense to do it.
Well, yeah, the
Um,
deductible was like $5,500 a building, and there was, I don't know, what, 6 buildings or something, so
yeah,
the deductible was like 67,000, and the total claim was for just over 400, I think,
I think it
420
was,
something.
yeah, I think 420 was the number. So absolutely made sense to do it.
Yeah,
And
yeah.
then this most recent one. So guys, you guys may have heard us talk about this. We had a fire on a property. Lost 2 units completely on how many units is that in that
48.
property? So out of 48 units, we lost 2 units completely. We have another unit that's partially damaged where the fire got up into the attic and came down and did some damage to just above the unit. So we have two completely gutted and one impacted. Um, but then the property as a whole sustained quite a bit of smoke and soot damage. As the fire happened in the middle of the day, all the systems were running in the property. So as things got into the hallway, they got sucked up into the ventilations and spread throughout the building. So
Mhm.
the most of the damages really came from smoke and soot. Um, so so the entire property is down right now because
Yeah,
of toxic levels, if you will, of smoke and soot that we have to clean up. So essentially, guys, like that happened in January, right? We have a fully down property since it's happened in January. We're going on 4 months now as we get into May, and we are just now getting to a point where we're starting to negotiate the payout from the insurance company.
yeah,
They've released a little bit of funds just to kind of help carry us through because they're like, hey, we know it's more than this number, so we'll give you at least this number. Is
yeah.
basically what they've said.
Right.
Um, so they've given us that, and a little frustrating, right? Because we're ready to work. Obviously, we have a vacant property, we have tenants on leases, and we're losing tenants every day that goes by. Because the property's down, tenants have to have somewhere to live. Um, it's been pretty frustrating. In the first claim, because of the way it was going, we did not hire what's called a public adjuster, which is the person that benefit. It's an adjuster that works for us. In this particular case, Tim and I actually talked about this one for like a week back and forth after it happened. We were like, no, we're not going to get one. Yeah, we should get one. No, we're not going to get one. And then I forgot what exactly happened where we were like, yeah, we need to hire a public adjuster. Um,
I don't remember. Oh, it was the adjuster from the insurance company showed up on the property, and he was like a residential claims adjuster and was like, "Oh,
yeah,
this is way over my head, but I think it's $300,000 of damage or something." And
yeah,
you were like, "Whoa, like I'm not that smart of a guy, but I know it's more than 300 grand."
yeah, yeah,
And then somebody had made a comment, wasn't it? It was like, "Oh, he's like one of the toughest adjusters in the area," or something like that.
yeah,
It was one of the restoration guys. We're like, "Oh, we know this guy. He's a pain to deal with." So we're like, "You know what? Maybe we do need to get a public adjuster." And I have to say, thankfully, we did because this
yeah,
claim is definitely over our heads for sure.
yeah, yeah. And especially because like my head is let's get in there and start. Let's start working.
Yeah,
Right.
and we can't. They're
Yeah.
like, "Don't touch anything." We're like, "Why? That doesn't do us any good."
Yeah, and one of the pieces of feedback is, hey, let's let the insurance company estimate what they think it's going to be, because the truth is, hey, and Tim and I, we kind of resemble this remark is we may be able to get it done for less.
Mhm.
Partly because we have crews that we work with all the time. We're able to go out to some of our crews, some of our vendors and say, hey, we're doing this work over here. And it may be 20, 30% less than what just an independent random third party contractor can come in and do it. And that's what the insurance company is going to pay on, right?
Mhm.
You going out and getting somebody who you don't have any relationship with to fix the roof, to install the HVACs, to build back your units, right?
Mhm.
So the the public adjuster had very clearly said to us, he was like, "Hey, don't start doing any work, right? Because as soon as you start doing work,
You're admitting, yeah, like,
yeah,
yeah, you kinda lose your negotiation leverage, which I thought was
yeah,
interesting. I had never heard that before.
yeah, yeah." So, and it starts to make sense, right? Because it's if they show up and they're like, "Oh, you rebuilt this unit. Show us the invoices for rebuilding that unit." Okay, that's what we'll pay, right? Um,
Right, 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 yeah, they're like, "No, it's gonna take a little longer, but let's get to an agreed upon amount and then go do the work because you could do it for less."
Yeah, and on the surface, right? Like you hear that comment because I'm thinking the same thing some of you guys are thinking, which is on the surface, it's like, wait a minute, aren't you like you're trying to make a profit off the insurance company? It's like, no, that's not what I'm actually doing. What I'm really doing as an owner is I'm trying to build in contingency
Yeah.
because clearly, as the public adjuster told us, as Tim and I have seen from doing a number of renovations ourselves, like we can go on that property when you have all the experts in the world all day long, walk on that property and say, here's what we think you have to do, but you really don't know until you start tearing it out.
Yeah, and then you
And
gotta deal with inspectors to get, pass code and CO and all that stuff.
well, and right, and then we might walk on there and we go, "Hey, we all think that the HVACs are okay, right?" And we go and rebuild everything, blah blah blah, and then we turn the HVACs on, and it's like, why does it still smell like smoke and soot in here?
Yeah.
It's because the HVAC systems were damaged and they collected all this stuff, and now they're blowing out. And it's like, well, shit, we didn't get paid to replace HVACs, but now we got to replace HVACs.
Right, right.
So those are kind of the things where it's like, hey, go ahead and let the insurance do their thing and kind of come to you with a number so that if you can get it done for less, that's great. Then you have a contingency built in to do things that are unexpected, right? Um,
Mhm. Yeah. Yeah,
so
Dennis, you're right.
that's
They love taking your it's kind of this terrible relationship, one-way relationship. It's like they tell you exactly what your cost is gonna be, and then they tell you what they're gonna give you. And we're like, "But that doesn't really work for us." And it's not very much of a two-way street. It's this is what it's gonna cost. This is what we're gonna charge you. Take it or leave it.
but I will tell you one place that I am appreciating it. And Tim, I think you see some of this too. Is we had a fire, so we had to get a restoration company in there quickly, right?
Oh
So we got the
gosh.
restoration company in there,
We should start a
and
restoration
as
company.
yeah, no kidding. And as we start going through the process, we're working with our public adjuster. And he's like, "Hey, I think they've done what they need to do. We need to stop them." So we stopped them. We was like, "Okay, you're done. Stop. Give us the bill." We got the bill, and we're like, "Whoa! like again, like Tim said, I'm not a real smart man, but this looks like a bunch of BS to me.
Yeah.
and
Yeah.
and so our public adjuster was like, just submit it to the insurance company, let the insurance company fight with them. So
Audit it. Yeah.
yeah, so one of the nice things where the insurance company kind of becomes your friend is when that happens, you go, "Hey, Mr. Restoration Company, introduce you to the very large national insurance company that you need to now negotiate with."
Yeah.
Right? It's like, let them fight that fight for you.
Yeah, I think they have a fight at 3 o'clock on Thursday.
They do, they do. I'm
I'm
looking forward,
CC'd on the emails, and I'm like, good thing I don't have to be there.
but I will tell you, man, it's almost been comical. Uh, $75 for OSB.
Yeah.
Hey,
Oh, Tim, you start telling Dennis some of the things that was
how
included in
about
our
how about
outrageous bill.
How about Dennis? Here's one of my favorite ones. Besides the ridiculous mileage, but so they hired contractors, right? They hired contractors and charged us an hourly rate for those contractors plus like 30% above and beyond what they're actually paying. And then, which is yeah, that's fine, whatever. But they charged us for each individual contractor's vehicle at $100 a day. So right? So they go out and they hire somebody locally to drive to the property and do work. And then the restoration company, charged us $100 per day for rental of someone's personal vehicle.
Mhm.
Um, times 11 contractors, 11 guys on the site,
Yeah.
$1,100 a day.
Just to have them drive to the job site.
Yeah, so and that's just one example. Another one of my favorites was I can't remember what the equipment's called. It's not a forklift, it's not a scissor lift. Um, it's essentially a pretty big piece of equipment that basically lifts stuff up, very heavy items, not a crane, up to like the second or third floor. Um, that thing sat on a flatbed truck on the property for 4 weeks. It never came off, and we got charged for every day it was sitting on the property.
Yeah. Hmm.
And it, and they clearly state what's funny is he goes we clearly state that this is for lifting things up to the third level, and I'm like, we have a two-story building.
Yeah.
What why do you need that? um which is exactly what the GC from the insurance company pushed back on. He was like, you don't need this on this property.
Right,
um
right.
yeah,
Yeah, I think the insurance company had it audited, and they, basically
that's
came
it,
back and was like,
that's it,
telehandler? I've never heard that
that's the
word
name,
before.
there it is, that's it, Dennis.
Is that it's
Yep.
got, like, forklifts and, like, a boom?
Yeah, kind of, yeah, yeah,
I gotta Google it.
yeah,
Telehandler.
but that's exactly the name, Dennis, thank you. um
Telehandler forklift. Oh, yeah, yeah, okay, yeah.
yeah.
That's exactly what I thought. I didn't know what that was called either.
Yeah, but, I got to see it, they look very cool, it
How
looked
much
very
Hey,
nice and
Tim, how
sh
much did they charge for that?
oh, I'd have to go back and look.
Because we could go buy one for, like, 50 grand
No, I'd
and
have to
rent
go
rent
look.
it out.
Oh, and the containers,
Oh, storage containers, those are great.
we had 3 storage
Oh,
containers.
no, my favorite's the porta potties.
Oh, I forgot about the porta potty. So we had his and her porta potties plus an ADA porta potty. So
Yeah,
we had
like,
a handicap porta potty on a job site. Um, I don't know.
it'll look new.
Yeah.
Oh,
But
boy,
yeah,
fun
the
times.
containers, they had 3 storage containers on site, that we have now moved over to our name, $138 a month, and,
What do we pay now that it's direct?
138 a month.
Oh.
Um,
What do they
that's
charge
our
us? 1,000 a month?
their no, their cost for the 3 was something like it was something like 1,200 a month, so basically $400 a pop.
Yeah, so basically, you just using that as an example, you probably expect them to have a 300% markup on top of the actual cost, so
Yeah, so
400% total, right?
but the good news is, like, hey, they're arguing that with big old national insurance company, not with
Yeah.
me.
God bless. Godspeed to you.
So every now and then, I guess the insurance company can kind of be your friend.
Right. Yeah. But it's been interesting nonetheless. We've learned a lot. I think we've kinda learned what we can handle and what we can't handle. Um,
Yeah,
that there's certain claims are just really big claims, and then there's other ones that, you can just kinda handle yourself and you don't submit a claim for, but, yeah, I mean, it's been an interesting learning period, and, you know, uh hopefully I think we got the crew starting next week, right? Or is it this week they're going to start?
We have the cleaning crew starting next week. That's
Yeah,
right.
so we'll start getting people back in here. Hopefully by the end of May, maybe June 1st, we'll have residents back into the property. So start generating some income again, which would be great. But
Yes.
oh, and then the best part, we got a renewal from that insurance company. It only went up like $4,000 or something
Total.
total. I'm like, okay. I mean, we're looking at like maybe what did they estimate it? Like almost 2 million, $1.9 million or something like that claim.
Mhm. Yeah.
And our rate went up 4 grand. So that's going to work out.
Yeah.
So
At least for this year.
yeah, that's right. Yeah.
Once the claim completes, I'm not sure.
Yeah,
Um,
fair. So,
yeah.
all right, guys. Well, thanks for joining our story time today and hearing some insurance things that we have going on and what we've learned and impacts that we've made. Hope we got something out of here, and we will see you next Tuesday. Peace.
All right, guys. See you.